What's going on? YouTube, Facebook, everybody. What's going on, Asheville, North Carolina? I'm sitting here in Asheville, North Carolina. You guys might know this guy.
Hello.
Justin Fraser and Hervé Francois. Right?
What's up, guys?
We're going to be talking a little shop with you guys. We're doing a little mastermind down here in Asheville. And we've got the Jacob Sandoval. It's his full name. His first name is the, middle name Jacob, last name Sandoval. What's up, Jacob? It's good to be is here.
How's it going, guys? How's it going?
Tell me something good, man.
No, I mean, it's a beautiful sunny day in San Francisco, California, so you can't complain.
Yeah,
Very nice.
Good stuff. Listen, if you guys are watching live on Facebook, give us a hi. If you guys are watching live on YouTube, give us a hi right now. Love to hear from you folks, to hear what you got to say to everybody. We're going to be talking shop about like the market, let's say, has changed, the real estate market. But DeRosa is still doing deals.
Still doing
right?
deals. Got to do deals.
Still making it rain. Right?
Yeah.
Not talking a little bit of trash there, but at the end of the day, we really are. And we want to talk to you guys about how we're doing it and how you can do it too. And we're still finding deals and we're still raising money in today's marketplace. Justin, man, let's talk about give us a history lesson, Justin. We're going to be talking about finding deals and raising money. But today, 2024, it is not 2023 or 2022 or 2021, right? DeRosa is making it happen and still finding deals and raising money. But it's not the same market. What's different, man? I mean, I know I'm maybe preaching the choir a little bit, but give us a quick backstory.
Look, we all know everything is different. Everything is harder than it was a couple of years ago. Volume of deals, of transactions is way down. We know that a lot less properties are being listed for sale. We know that when they are being listed for sale, it's kind of not even a full listing. It's usually a floating, and an owner will go to a broker and say, "Hey, what do you think you could maybe get me?" And then the brokers will kind of approach us and say, "We have an owner who's maybe thinking about selling." And so it's not even full commitments because sellers are not necessarily going full out for marketing right now because they know that prices can be a little funky.
Yeah.
And prices are funky because interest rates are very high right now, so it's hard to get a loan. Insurance costs have skyrocketed over the last couple of years. Taxes, of course, are up. All our labor costs are up. And so we're struggling kind of across the board with increased expenses. And we're not getting that great bump that we had during COVID, which was rents going up 10, 15% per year, which was great for us, but that has stopped. And we're swinging the pendulum the other way, where rental rates are mostly stagnant. And in some markets, rental rates are going down. Thankfully, we have not seen that. We're not seeing rates go down, but our fixed cost, our income is kind of staying steady. And so all that combines to make deals a bit harder to find and pencil out.
What I think works on finding deals is being willing. I mean, you didn't have to be creative, man. You just had to catch a deal. Yep. The last 10 years, creativity didn't really mean anything, right? It didn't mean right?
Yeah, absolutely.
But what is becoming back in play, what's going to get things done today, and this is what I remember from doing business in 2008, 9, and 10. If you weren't creative, you were on the bench.
Yep.
100%. If you weren't able to figure out how to do a short sale or seller financing or negotiating some sort of creative way to make it happen, brokers rolling their commissions back into the deal to make it work or whatever it took to get creative, you were not closing a deal. You were on the bench, man. And DeRosa has figured out ways to get creative.
Yep.
Right?
Yep. Absolutely.
What are some ways that we can go? You're our fisherman here. Right?
Yeah.
And that bringing stuff in. What does that mean on your side?
On an acquisition standpoint, basically what you start to do, you take a look at all aspects of acquisitions. Where are we looking for deals geographically? How are we structuring deals? What asset classes could we potentially be looking at? Other asset classes besides just multifamily. It's a way to go ahead and diversify our risk, to go ahead and juice up some returns to investors and things like that. So as you guys know, we're currently involved in a deal that puts us in a new geographic location, as well as a new type of, not necessarily brand new, not necessarily a new asset class, but the asset being formed in a way that we have not acquired before when you start talking about development and so on and so forth. So these are different things in regards to structuring. A lot more conversations with our loan brokers, the type of different loans that we could put on deals, has us look at the occupancy of deals, has us look at how are we going to go ahead and renovate the units, constant conversations with Justin, And our property manager, Tara Ingard, said, okay, maybe we're not going to go ahead and turn 30% of the units in year one. Instead, it's going to be 15% of the units rather than taking up the rents by an additional $150
this aggressive growth plan thing, man.
Exactly. Temper, right?
Yeah.
So
aggressive growth plans used to work the last couple of years, man. But aggressive growth plans, Matt talking, take two. Aggressive growth plans are, I think, the kiss of death in some ways.
Absolutely.
But then that changes that. But let's flip it around, man. I'm gonna call him my man Jacob Sandoval right here, who handles all of our investor communications and everything like that, right? Jacob, the world of like raising equity just a few years ago used to be, to use the fisherman's term, right? You just pretty much throw a net in the water. And there were buddies that I had, and even us or whatever, you'd go do one webinar and raise $10 million. You know, boom, there you go. Yeah. Put your deal on Facebook and stand back like this and let the money roll in, right?
Right.
Not the case anymore, Jacob. How has the equity world changed? You know, not just at DeRosa, not for our conversations, but just in the world. What have you seen in all the equity conversations you've had with investors? Like, how's equity changed, and how have we had to change the game with regards to equity?
Yeah, absolutely, Matt. So I think investors, LPs, they're a little bit skeptical right now. And I feel rightfully so. We're in kind of a frothy economic environment. Are we going to have a hard landing? Are we going to have a soft landing? Are interest rates going to continue to go up? When are they going to come down? We're in an election year. A lot of these people are in deals that haven't panned out in the past couple of years with a lot of different syndications. And so I think rightfully so, people are skeptical of these investments right now. And, I think they're getting a little bit more inquisitive about these aggressive growth plans. Like the typical value add multifamily deal, it's tougher to execute these days. We kind of already touched on that. So LPs they're a little bit more skeptical. They're asking a lot of really good questions. And I think they're doing the right thing. They're turning over more stones when they're talking to me and talking to other syndicators and trying to figure out, is this deal what they say, the deal is? Because, for the past couple of years, maybe those things haven't panned out. So I think they're rightfully a little skeptical.
Yeah, absolutely. So I mean, just like equities had to get a lot more patient in current deals that it's in, right? Because the market's changed, and aggressive plans that syndicators went into deals with have not quite panned out yet. And plans such as at DeRosa, we've had to change and pivot our plans that we had when we went into deals and that. And so that's had to create a lot more patience. A lot of deals that were bought in the last 3 to 5 years or whatever have had to pivot and change. And so investors are not like, oh, sure, let's write another check for this deal or whatever, for the next project and that. So equities had to get patient and pivot, right? And so it's what's interesting. Guys, I want to do a quick shameless plug. Okay. If you guys are watching this and you want to go and find more deals for you to do as an active syndicator, right? We have a phenomenal untouched program that is like no other program you've ever seen. It's not a program on how to raise money, right? Not a program on how to find deals. Not a program on how to manage deals you have. Not a program on how to start a management company. Right. It's not a program on how to run marketing. It's not a program on how to build a business around multifamily. It's all of those things in one thing, right? With one-on-one coaching from these three knuckleheads right here, including along with other team members that DeRosa has. It's all of it. It is the full, dare I say, the full syndication rainbow, all the colors of the rainbow, all in one thing. And that's called the DeRosa Multifamily Accelerator Program.
That's it. We've said it all, right? We've got everything. If you want to learn how to build your own business, we got that. If you want to invest with us passively and great cash flow and wealth for your family, we got that as well. So we are here. DeRosa Group is here to answer your questions, whether it be on building your own business or how you can invest passively with us and make yourself rich.
We're going to do it, man.
No doubt. Yeah, absolutely.
Yeah.
So